If you want to make money in this market, well, find someone who's managing it and find out their performance. Joe McAlinden, Catalpa Capital Chief Investment Officer, former Chief Investment Officer, Morgan Stanley Asset Management. Joe, it's a pleasure to have you here.
Pimm,
Last time we spoke, you were doing the V. You said we were going to get a move higher in stocks, and we do see this today, up nearly 2.5%, but particularly small and mid-cap stocks. What kinds of investors go out and buy small and mid-cap stocks?
Small and mid-sized investors sometimes. Very often it's the public that turns these markets at turning points like this. And I think that in spite of all the gloom and doom, I think a lot of people that are out there on the ground that are in touch with smaller companies around America that, you know, they're having a hard time with this economy, but they're doing okay. And corporate profits are actually very, very good across a wide swath of American companies. So I think, as we've talked about on Bloomberg a number of times, I think that small caps are going to lead the way back up to maybe to new highs on this market next year.
Are small and mid-cap stocks also finding favor because they may be more immune to troubles in places like Europe or indeed a potential slowdown in Asia? They're really the domestic market, the United States.
They are the domestic market and would logically be more immune to a global slowdown, which is, you know, the fear had been a bit hit particularly hard in Europe. That would spill over into emerging economies. And so you've had a big correction in the emerging market stocks and in stocks in general around the globe. But small caps in the U.S. also got hit, even though you would think they're immune, partly because of this pattern that many quick trigger hedge funds are following of risk on, risk off. And
what does that mean, risk on, risk off?
It's when risk is on, they buy everything that's not the highest quality and sell the highest quality. And when risk is off, they sell everything.
So like selling high yield bonds, for example, when the risk is off.
They'll sell high yield bonds, which I also think are attractive, and they'll sell small cap stocks, even though American small cap companies would have been immune to what could be a very serious global economic problem. But, you know, the breaking news is encouraging about maybe avoiding that.
Now, you mentioned emerging markets, and we know that emerging markets such as Brazil, particularly China, the stock markets, they have fallen dramatically. We're talking maybe 25% at least.
Yep.
Would you buy them now?
I would buy a cross-section of emerging markets. There's a couple of ETFs that give you exposure to it. But generally, Pimm, just taking it from the top, I think equities are massively oversold and probably made a typical bottom in October. I think that global markets will recover strongly, and I think that small caps and their counterparts, sort of in the global arena, the emerging markets, will be where you get outperformance.
And would you be focused on a particular area of the emerging markets? Would it be those that cater to their domestic markets or indeed export-led industries?
I think that, you know, a lot of what brought the economy, the stock market down was fears of economic slowing. And to the extent that we have some stabilization, signs of stabilization in Europe, the rescue of Dexia, the statement from Merkel, and a secret plan to fix things.
No, but secret plans. I mean, Joe, doesn't this give you a little bit of concern? Because we seem to move higher whenever we get talk of a plan, and then when it comes out and they're short of details, the market then sells off.
Yeah, and the market probably will correct if they come up short. But, you know, politicians are great through history of having secret plans to get out of Cambodia or to fix the U.S. Federal budget deficit. And this will be part of life forever. I think that, you know, the major leaders in the European Union know what they need to do, and they know what the consequences are going to be if they don't get it done. We'll see by the end of October. But I think in the meantime, the fact that they're working on it, they've made, you know, assuring statements, has obviously, just looking at the tape, has reassured investors that this is not going to bring us down into an abyss. And the market's oversold, money is easy, money supplies are growing, and the tightening in China may be coming to an end. So I think the picture is pretty bright over the next 3 to 6 months.
I want to get you started on corporate earnings for U.S. companies, particularly companies like Alcoa. They begin tomorrow. What do you think the third quarter is going to tell us?
Well, in the third quarter, you know, commodity prices took a hit, so I would think that commodity type of companies may come up short, the banks may come up a little bit short, but the general level of earnings, every time somebody that makes, let's say, aluminum has a problem because of weak product prices, people who use aluminum do better. So I think overall earnings are going to be quite surprisingly good. Not phenomenal like they've been, but the level of earnings is such that it can support much higher stock prices, in my opinion.
All right, Joe, you've been bullish on equities. What specific industry groups would you be buying in the United States? We were just talking during the break about automobile sales and retail sales. Two areas you think would make you some money?
Well, we had a lot of surveys of faltering consumer confidence and slowing income growth, and yet car sales have been remarkably strong, and the retail sales number that we'll print this week looks like it's going to be okay. And so people are ready to spend money in spite of how bad things are. We always have to remember that it's very sad for the 9% of the people that are unemployed, most of whom are probably going to stay unemployed for a while. But the other 91% have jobs, and if their confidence picks up, they'll start spending money. That's what Americans do. So I think the consumer discretionary of the top 10 S&P sectors that you can pull up on your tornado on Bloomberg, consumer discretionary, I think, is going to continue to outperform the market.
Consumer discretionary stocks, and I mean, these could be companies, like Nordstrom, Macy's?
Car companies, eventually even the housing-related businesses. But right now I would focus on the home improvement side of that
Home
sector.
Depot and Lowe's?
Yes, and all the, the companies that make the stuff that goes into fixing up a house. But beyond that, I think that one of the areas that's been particularly hard hit as the commodity prices come down is the broad materials index. And while I think it may take a while to get real traction going, that could be a big winner over the next 6 months, because I think that China's going to have a soft landing, not a hard landing, and the world economy is going to claw its way out of this over the next 2 years. We're not going to go into a depression.
So would that mean to buy stocks such as Freeport-McMoRan, the gold and copper miners?
I don't know about gold. I think that gold, I'd be very careful with gold, but I think that the basic materials and companies that make stuff that you need to build out the world economy and to keep expanding the infrastructure in the emerging nations, all that stuff is going to do better. Two other sectors I think worth noting. One that has been absolutely hammered and has a lot of reasons to avoid it is financials. But I think that if this market turns, financials are going to be the high beta trade coming back out of it. And at some point, I think energy will kick in as well. So I'd say consumer discretionary, materials, financials, and energy.
And when you talk about energy, you're talking about the big integrated energy companies or the companies that sell services to those energy exploration firms?
I'd stick with the big integrateds. You got good dividend yields, and these are good companies.
All right, I want to thank you very much, Joe McAlinden, Chief Investment Officer, Catalpa Capital. Always a pleasure.